Hello, welcome back to my Accounting 1120 discussion on partnership accounting. I promise this one will be shorter. I have a goal. Big surprise there, huh? My goal is to look at the closing entries for net income and withdrawals of the partnership and to use that information to make a statement of changes in partners' equity. I don't need to show you how to split income anymore. I'm just going to give you some numbers, assuming that's all been done. We'll make the closing entries, and then we'll see how statement of changes in partners' equity would look. Here's the facts. We have net income of $100,000, and we're going to split $60,000 to partner A and $40,000 to partner B, without really going into how that was split, and that we have balances in the withdrawals or drawings accounts, $10,000 for partner A and $8,000 for partner B. And the beginning balances for the two partners was $100,000 and $200,000 respectively. So, first thing we want to do is make an entry to close income summary. So we were going to close net income. So we're going to make an entry to close income summary. Income summary would have a credit balance because it's income. So we're going to debit income summary. For income was $100,000, so we'll debit it for $100,000, and we'll split it between our two partners. Capital A gets $60,000, and capital partner B gets $40,000. We're not going to practice splitting income anymore. We've done that. So we made entry to close net income. Now we need to make an entry close the draws accounts or the withdrawals. You can write it any way you want. I don't like the word withdrawals for some reason. If you recall, draws accounts have $10,000 or have debit balances, and so we'll credit them. So we're going to reduce the capital account, partner A, by the amount of money they've had withheld or that they've withdrawn, and the capital account for partner B by the money that they've withdrawn. And we'll close the draws account for partner A. It's kept separately from the draws account for partner B. Everybody needs to keep track of how much money they've taken. We'll take our information from the second line. Partner A withdrew $10,000, so we'll drop his capital account by that, and we'll close his drawing account for that. And partner B had an $8,000 balance in their withdrawals account, so we'll drop their capital account and close that account. We've now closed net income, which was an income summary, and we've closed the withdrawals account. We're ready to make the statement of changes in partners' equity. Hold on. I'm getting wild now. Starting to abbreviate on you. We have the name of the business, and the fact that it's a statement of changes in partners' equity, and then it would be for the period of time covered. And look how close this is to a regular owner's equity statement. You have the beginning balance, and you add into that any capital investments they've made. Our partners haven't made any. And any net income that is accruing to them. Uh-oh, hold on. Okay, that was too bizarre. I answered my phone and there was a recording and it said, goodbye. Go away. All right, where were we? Brother. We have our statement of changes in partners' equity. The beginning balance in our information, we said the third row, our first partner had $100,000. And our second partner had, where are we? There we go, right here, $200,000. So those are our beginning balances. And it goes up for investments. Neither of our partners made any this time. And it goes up for net income. Partner A had $60,000 worth of net income. So we'll add that into theirs. And partner B had $40,000 worth of net income. So we'll add that into theirs. This means right now that there's 160,000 in our capital account for A and 240,000 in our capital account for B. Now we need to reduce it for draws. Capital goes down 10,000 for A because he has withdrawn $10,000 worth of assets from the business, just like an owner can do, and capital B will go down for 8. And again, you keep all of it in a separate capital account because you don't want credit for someone else's withdrawals. You just want credit for yours. Then you have your ending balance. 160 minus 10 is 150,000. We are ending balance for capital A, and 232 capital account B. And the sum of these two would be shown on the balance sheet as total partner's equity. Well, we've accomplished our goal. We looked at closing entries for net income in the withdrawals accounts, and then we made a statement of changes in partner's equity from facts. This one is short enough to make up for the last one being too long. Thanks for joining me. Bye for now.